Today, are bank deposits safer in Australia or New Zealand? Hello again, it's Martin North from Digital Finance Analytics, my latest post covering finance and property news with a distinctively Australian flavour. Today I'm joined by Robbie Barwick from the Citizens Party. Hi Robbie.
Hi Martin.
It's a really important question given everything that's going on at the moment.
Yes, there's intriguing developments coming from New Zealand that have got our attention, and it touches a whole bunch of areas, including the systemic stability of the financial system and the view of the Kiwis that there may be some issues there that our authorities aren't talking about. But this fundamental question of bail-in and what it will mean for people if there is a bail-in, and the curious differences between what Australia claims and what's happening in New Zealand, which is more curious because they're the same banks. Their banks are our banks. Right, and these differences must be reconciled, Martin. And I, for one, strongly suspect that the reconciling those differences will lead us to the conclusion that our side of the ditch may be being a bit dishonest.
No, never been heard of. And look, it's worth just winding back the tape slightly because, of course, you know, the whole concept of deposit bail-in is something which many people around the world have railed against and said it's not real, it's never going to happen. But
Yep.
The legislation is there or thereabouts in many countries. And essentially it's the scenario that says if a bank gets into difficulty, rather than grizzling off to the government and getting government money, they might actually convert your savings in your accounts into shares in the banks and basically recapitalise the banks that way. It's actually a G20 initiative that was actually brought in after the global financial crisis. And of course in New Zealand they had this thing called the Open Banking Resolution, which they brought in off their own bat really, because they're not part of G20, which is very clear, it's very stark, and it really is, you know, very transparent, although they're talking about it now. In Australia, not so much, very vague. Nobody wants to admit that they've actually made anything in terms of those sorts of arrangements, although if you look below the surface you could ask some rather interesting questions to which the regulators don't want to answer.
Yeah, so let's go through the details of what's happening in New Zealand and the differences in Australia. But also, let me just say that this is in the context of the fight we waged last year around the bill that Senator Malcolm Roberts put up, One Nation Senator Malcolm Roberts put up, to amend the 2018 APRA Crisis Emergency Powers law, so that the loophole that we had identified in that law that could apply to deposits in an emergency cannot. Now that bill was defeated when it was voted on in December. However, there was a pretense from the government of perhaps making a concession, perhaps coming up with a compromise. I can report that's actually gone nowhere. Right?
Surprise.
So there is what the Malcolm Roberts office is considering, and it's not confirmed yet, but whenever Parliament sits next, it's supposed to sit in August, but the lockdowns may delay it for a month or so. Whenever Parliament sits next, they may actually move an amendment to a government bill that will achieve the same thing. So this conversation could be very relevant to what happens in Parliament when it next sits. And if it is, we'll update you on that, because there's things that the viewers of this show who are concerned about bail-in can do to help prepare the way for that by making calls to politicians, etc. We're not there yet, but you know, the details of what we're about to go through are quite important, because it's not just about information. We should actually be doing something about this.
And Robbie, just on that, it's worth just pausing to say, of course, in Australia, with the term funding facility that the Reserve Bank threw at the banks have actually put almost twice as much back with the Reserve Bank at the moment. So they don't actually have liquidity issues at this stage in the game, right? They've actually got the other problem, which is they've got all this liquidity sloshing around and no one to lend it to.
Yeah, well, and that is a choice they make, right?
Yeah.
You know, I mean, I looked at that statistic, how much money the banks have been hoarding, and just made me shake my head. We we need a national development bank in this country. We need a bank, and if the private banks aren't going to do it, then it's their own fault. Let's have a public bank that can invest in the need that's out there, and there's plenty of need in the real economy, right? The need for infrastructure, local, state, and federal infrastructure, big projects, small projects. There are plenty of industries that, if someone's willing to have a go backing them, will flourish. Absolutely flourish in this country. They can become world beaters, right? And it's just everything about our banking system is distorted, Martin, and it comes down to the fact we've got 4 big banks, the big 4, that are now more financial casinos than they are banks, and the whole they're and they're not that different to their counterparts around the world in that regard. So the global banking, central banking structures have been oriented for too long now to propping up these casinos. Don't make them change their behaviour, right? Don't make them stop being casinos. Let's prop them up with liquidity and with these bail-in options, right? And you've got to take a step back and say, what are we protecting here? This is not a proper banking system. A proper banking system is supposed to take some risk, but that risk should be whether a loan to a small business may go bad or not whether they've gambled 100 to 1 on hedge funds that are betting on cryptocurrency right now in New York. That's what banks and hedge funds are doing in New York, betting 100 to 1 on cryptocurrency, right? This is crazy. We need to get back to the real economy. And that's where we've been. That's a big part of why.
Sorry, Robbie, just before we go on there, just to say, I don't know whether you saw, but overnight in the UK, the House of Lords released a report on quantitative easing, right? And basically they were highly critical of the whole quantitative easing program in the UK, the Bank of England, basically saying it's not transparent, it's creating greater inequality, it's creating greater financial instability, right? I mean, this is the House of Lords speaking, right? So again, you've got to say the current mode of operation of our banking system and the current relationship between the central banks and the quantitative easing is a busted flush, right? We need a different model, a different approach. And right in the middle of that then comes deposit bail-in, because that's another lever that they've actually engineered to try and, quote, support the banking system, right? And that report in the UK said, all of this quantitative easing stuff is about protecting financial stability against the real economy. And that's the fundamental issue that we're tackling here.
Yeah, that has been the issue since 2008. I mean, well, before that, but 2008 should have brought it all undone.
Yep.
And instead of abiding by their own neoliberal rules and let the market correct itself, right? They bailed out the banks, and then, and you and I took notice this a few years ago, Martin. They invented bail-in to, in their own words, shift the burden onto households. Right? Don't make the bankers pay for their own mistakes. Put the burden on households, because the whole thing could come down otherwise. Well, and if it had have come down, there was an easy way to restabilize the system. Get in there, set up public banks, and recapitalize it. But no, they want to stick. They want socialize, privatize profits, socialize losses. Right? They want to have their cake and eat it too. Have a private banking monopoly that is answerable to no government, right? Until it's all coming down, and then bail us out. And then when that looked bad, they came up with bail-in. So to say, oh no, see, we're not going to be bailed out anymore. We'll take our depositors and creditors' money instead.
And sidebar, who created the bail-in concept, right? They were actually bankers.
Yep, couple of we told the story in one of our, back in 2016, actually, a couple of Credit Suisse investment bankers, derivatives traders, derivatives salesmen, experts in derivatives, went to, they were at the famous Lehman Brothers salvage attempt on the weekend of the 14th and, I think it was the 14th and 15th of, 13th and 14th of September 2008. Can we save Lehman Brothers? And it came down to, who's going to, there's 25, I think it was about $25 billion there, and they decided not to save it. But these guys said, for the sake of that $25 billion, we could have taken that from their creditors and that would have saved a meltdown of $150 billion in derivatives. We should have done that. That was the seed idea for bail-in. But then Mark Carney, at the Bank of England, a former Goldman Sachs guy, Paul Tucker at the Bank of England, and a top guy at the FDIC in America, they basically turned that into what the Financial Stability Board came up with in 2011. And interestingly, that the Financial Stability Board was headed at the time, they came up with bail-in, Martin, by Mario Draghi. And Mario Draghi has come full circle. He's now the Prime Minister of Italy. And when we talk about bail-in, we often talk about Cyprus because that was the first one back in 2013. It's very shocking. But no country has suffered more bail-ins than Italy under the rules that their Prime Minister, when he wasn't Prime Minister, came up with, right? And I'm going to refer to that in a minute because it's relevant to what New Zealand's talking about.
Yeah.
And just one more thing while we're talking about the evils of the financial system, which is also relevant. Breaking news today is APRA has announced that between it and the Commonwealth Director of Public Prosecutions, AMP will not be prosecuted for charging people for their fees for no service that came out of the Royal Commission. And when in making that announcement, and I got to read you this is representative of the just the status of Australia's financial system, right here. The Commonwealth Director of Public Prosecutions, this was their explanation. They say the CDPP has now determined on the basis of the available evidence and weighing the relevant public interest factors that no charges should be brought for that conduct. And if you cast your mind back to the Royal Commission, that was one of the parts that the otherwise rather staid and reserved commissioner was very shocked at. I think it's the part he said, hang on, he asked someone, why isn't this criminal?
Yep.
Right? ASIC was supposed to pursue this and the CDP. When they say weighing relevant public interest factors, this is the logic that got the banks off the hook in America, right? It's called too big to jail. If we take these big institutions and actually hold them criminally accountable for their actions, that could trigger financial instability in the financial system, right? The logic of what you just quoted from the Bank of England, the House of Lords, etc., on QE and the rest of it, the logic of too big to jail. And that's where bail-in is particularly bad because it's designed to support that and stop the alternative to bail-in, which is Glass-Steagall, which we can talk about as well. But because what Glass-Steagall would do is end too big to fail and end too big to jail because no one bank would be systemically important, right? But the whole system would be kept safe because if you're a deposit-taking bank, you will not be allowed to do the things that get you into trouble.
Absolutely. Yeah, and the AMP story is just another example of captured regulators and insufficient protection for real Australians, real businesses, right? And protecting, again, the financial system and those at the top of the system who seem to get away scot-free again and again and again. How many people in the banking sector went to jail post the global financial crisis?
Yep. Now, we're actually... we can talk about this on a different show, not today, but people who are familiar with the Citizens Party might have heard us talking about this Sterling First scandal that's largely in Western Australia, but it's frankly all over the place. 140 pensioners facing eviction. It's one reason that we're supporting their call for an inquiry, a Senate inquiry into the scandal and into ASIC. Right, because a lot has happened with ASIC, and we've talked about the circumstances around what James Shipton may have been trying to do in being forced out. So we do have to do that. But
I'm sorry, just another. We also, I think, we need what the House of Lords did here. We need an inquiry into quantitative easing and the lack of accountability and disclosure and the connections between the Reserve Bank here and the Treasury, and how independent are they? How far are they actually running? The same political lines as the Treasury, because that was the other thing that came out of the UK. Right, the Treasury in the UK would not actually give the inquiry a straight answer as to the relationship between Treasury and the Bank of England. That is an astonishing revelation, and my hypothesis is we have exactly the same problem here.
Well, no, you raise a good point. We should push that. I do know I have a friend who's a member of the House of Lords, Lord Prem Sikka of Basildon and Kingswood or something. Um, he's an activist, forensic accountant. He's an accounting professor. I mean, we've talked about him before, Martin, in previous shows a while ago when we put up the bill to audit the banks, because he conducted inquiry into the Big Four auditors in the UK as well. But now he's in the House of Lords, an appointee by the Labor Party, and it is good that people like him can get in there and be part of these more independent inquiries that otherwise you wouldn't see a lot of day.
Well, I'll tell you, the chair was actually from Boris Johnson's party. All right, so this is actually not something that is just a side issue. And one of the people on the committee in the UK was Mervyn King. Right, Mervyn King was the guy in charge of the Bank of England in 2009 when they did the first quantitative easing as an emergency measure. And he is also absolutely scathing of where they've taken it. So this is a mainstream commentary, right, which is going precisely against the narrative that so many people here in Australia are being fed with regard to quantitative easing, and it's the only way, etc., right? It's worth reading the report. We'll put links and things below. But I actually think there is an opportunity here to lobby in Australia for the same sort of inquiry, because there's so many questions that are going unanswered at the moment.
I think the Senate here has an appetite to look into these things like they never have before. We've discussed that in recent shows, how the Senate has. There's people in the Senate that are very keen to dig into these issues, put the Reserve Bank on the stand, etc. So let's take that up. But now let's re-ask.
Precursors, but very important precursors now to the bail-in specific conversation and New Zealand, because they're about to shift the rules a bit, aren't they?
No, they are. They are. So the question is, are bank deposits safer in Australia or New Zealand? We may not answer that question, but we're going to give you the reasons why you should certainly be asking it. In fact, I know there is a good reason to say. I'll come up with an answer with a reason at the end, and make sure I do, Martin. I don't forget about it. What I would be in favour of saying that New Zealand bank deposits in New Zealand are potentially safer than in Australia, right? But let's go through the details. So what's happened is we had a law passed here in 2018, February 14, Valentine's Day 2018, the St. Valentine's Day massacre of Australian bank deposits, right? They snuck it through, only 8 senators in the chamber. I'm in the gallery looking down with Dr. Wilson's side, the former APRA principal researcher. We're watching this bill go through like that. And there was a loophole that we identified. Hang on, what does that mean? Because it said that bail-in, the bail-in terms will apply to these types of assets or any other instrument. And those 4 words, or any other instrument, is a loophole big enough to drive a truck through. And that's what Senator Malcolm Roberts has been trying to close up, that loophole. In New Zealand, we were able to highlight all along when our politicians here denied that this could be a possibility. We're saying, look across the ditch. There's the Reserve Bank in New Zealand, and we should put up the graphic, Martin, the lovely colour graphic. They have this, they're totally transparent, totally open. They've got this system called open bank resolution. Yeah, we're going to take your deposits, and yeah, we're going to prop the bank up. And if there's anything left, you might get some of your deposits back, right? And that's called open bank resolution. And our politicians are saying, oh, that could never happen. It's unthinkable. And they went so far as to say, including in the Senate report last year, to cover their own backsides, like, this is to reinforce the point, it's unthinkable. Any country that does this to deposits is threatening the stability of the financial system. And that meant that's what they were criticising New Zealand of doing then. And Europe and England and the United States. Of course, they don't want to follow that thought through and be honest, that's what it means, because yes, every country's doing it, guys. And you're claiming here, we'll never do it because that'll threaten the stability of the financial system. I agree it will if it's ever used properly, right? But that means you're criticising our closest, the countries that are closest to us economically. So that was the state of play. And yeah, we knew New Zealand had this power, and Australia was in denial. New Zealand has become very interesting though, because they have just announced this year that they are going to enact a full statutory bail-in law. And at first I was perplexed because I thought, well, they got the most explicit one in the world. However, I did know that what they had passed, that OBR, Open Bank Resolution, was developed before the G20 Financial Stability Board bail-in system. And it was only, and once they developed their system, New Zealand said, look, ours is compliant with that. But that shows you that New Zealand's, up until recently, the New Zealand Reserve Bank has been this very radical neoliberal entity since 1989, actually. It's been the most independent neoliberal reserve bank in the world, right? And they take a very hard-nosed they have taken a very hard-nosed free market approach to everything. And so in their open bank resolution power, when they described, to justify why they're going to take deposits, they said blatantly, well, every depositor is an investor who's made a conscious decision on risk, right? And therefore, tough. We're going to treat them all effectively like sophisticated investors. And I'm just shaking my head at the time, thinking, what are you talking about? The vast majority of people are not sophisticated investors. When it comes to putting money in deposit in the bank, they do it out of trust because they've been doing it since they were kids, out of trust. You put it under your mattress or you put it in the bank, and everyone says, put it in the bank, that's where it's safe. That's why people have a relationship with banks and deposits, right? There's a minority of people who become sophisticated investors who can think about all those factors. And yeah, you are lending money to the bank effectively, etc. But that's not the relationship most people have. And that's why banks are licensed and regulated so that trust relationship is treated properly, right? And here's the Reserve Bank of New Zealand, their power saying, oh, they're just sophisticated investors. They've made a conscious, weighing up of risk, and therefore we can take their money to prop up the banks. And actually it's good for them, because if we didn't take their money to prop up the banks, if we didn't take some of their money to prop up the bank, they'll lose all their money. All right, and that was the logic. New Zealand's good for you. So suddenly the New Zealand Reserve Bank this year is saying we're going to have a statutory bail-in law. And I'm thinking, well, why? Well, it turns out that just like Australia, where the IMF does these semi-regular financial system stability reports, they'd also do them for New Zealand. And the IMF had recommended New Zealand go down the statutory bail-in law path because they had some criticisms of open bank resolution. And I think essentially, Martin, the criticism was, hey, you guys, this is so explicit. You guys risk giving the game away here, right? Right? Tone it down a bit. I mean, that's essential. So what they said is that there was a technical criticism that, okay, you're showing how you can prop up the bank, but you're not showing, the current system doesn't show how you're going to resolve the debts. So you need something like that. And this is the tone it down a bit. Boys, dear friends in New Zealand, we think you're going to need deposit insurance, because if the New Zealand public ever got wind of how explicit your bail-in system is, they're going to be run on the banks. you got to have something that makes them feel protected, right? And so New Zealand reluctantly, and this is, I can't emphasize that enough, because they had proudly not had deposit insurance. No guarantees there. So they had reluctantly agreed to do deposit insurance, which is supposed to come into force, I think, in 2023. And this is part of that. This bill is related to that. They're going to pass a law saying this is what we're going to do vis-a-vis bail-in, and it'll lay out all the steps of a bail-in. And in that regard, will be quite similar, I suspect, to what they have in the European Union. But the but is how they talk about deposits for the new system and insured deposits. So first of all, it's clear deposits will be bailed in New Zealand in the new system, just like in the old system. But they've got these insured deposits. And before, I want to read some quotes from their cabinet paper on this that came out in April. But before I do, I want to remind, hopefully there's a bunch of viewers who have made calls around bail-in, written letters and emails around bail-in, and you'll know what I'm about to say, because every major party politician and the government always says the same thing, and they always have from the beginning when bail-in's been raised in Australia. Don't worry, your deposits are insured, right? And so now the idea is you have this thing called deposit insurance. That means bail-in doesn't matter. We showed, though, Martin, many times that in the way the system works in Australia with deposit insurance, the Financial Claims Scheme, FCS, $250,000 per person per bank, that it only is activated to be able to be paid once a bank collapses. And the whole point of bail-in is to stop a bank from collapsing. So a bail-in will happen before the financial claims scheme is activated in Australia, right? And therefore, we always said this is an irrelevant argument. Well, the New Zealand discussion shows it's more than irrelevant. It is shocking how ambiguous the question of insured deposits will be under the new bail-in system. So just bear with me here. I want to read these quotes. This is from Grant Robertson, who's the finance minister over there, and it's from this rather lengthy cabinet paper that they made public back in April. And as I read through it, we can comment. Cabinet, this is what it says. Cabinet also agreed in principle to introduce the power to write down and convert to equity unsecured liabilities of an entity that is in resolution. This is known as statutory bail-in. Statutory bail-in is designed to help resolve large institutions by internalising losses in a manner that allows critical operations to continue and deposit accounts and other services to remain accessible without requiring taxpayer support. And that's the whole, the scam justification for bail-in. Oh, we can't, taxpayers aren't going to bail out banks anymore, their depositors will. While the scope of bail-in is generally set broadly, insured depositors are often excluded. Example, under the UK and European Union frameworks. However, those jurisdictions have adjusted their creditor hierarchy to provide a preferential status to insured deposits. I am not proposing to adopt such an approach here. And that tells you straight away that, whatever the sense that deposits are protected in the EU, they haven't settled on what they're going to do in New Zealand yet. And straight away, and I want you to be thinking about, well, hang on, what's the point of deposit insurance if they can't just give you a black and white guarantee? Deposits are insured, they'll never be bailed in, right? He's already, the whole discussion here is ambiguous. Then he says this: the appropriate treatment of insured deposits within this framework is still under consideration, but they will be protected by deposit insurance in any case. Well, that last bit sounds good, except it's on the back of a very ambiguous sentence. The scope of statutory bail-in will also be extended to writing down share capital and cancelling shares. And then he jumps to this, and this adds to the ambiguity. Insured depositors will need to have confidence that they will get prompt access to their deposits in a resolution, irrespective of how that resolution is conducted. In resolutions other than liquidations, this can either be achieved by exempting them from bail-in or by making it clear that the deposit insurance fund will operate under the Reserve Bank's direction to ensure access to deposits that would otherwise have been bailed in. I will take further advice from officials and finalise how deposits are protected outside of liquidation and payout under delegated authority. Now, so my main description of all that is ambiguous. And the thing to bear in mind when you hear such ambiguity is they're planning a bail-in system that coincides with deposit insurance, and they cannot state categorically up front your deposits, your insured deposits now, right? And in New Zealand, it'll be $100,000. Anything above that, of course, is fair game for any bail-in. Your insured deposits are safe. They can't state it. Why can't they state it? Well, I know why they can't state it. And I also know how it works in practice in Europe. They can't state it because they don't know in advance how an actual banking crisis will unfold. And the purpose of bail-in, Martin, is not to protect people, it's to protect banks, right? And in an actual banking crisis, they know that they have to deal with all sorts of contingencies, and because they've adopted the bail-in approach, they need the flexibility to grab whatever they need to bail out the bank, right? And they cannot be bound by this thing called deposit insurance. And even though, and the giveaway is by citing the European Union and UK as if that's the gold standard of protected deposits, because the way it works in practice there, where bail-ins have happened, and they've happened most in Italy, like I've said, they bail in everything and then reimburse the insured amount. Except the bail-in takes 1 second, bang, it's gone from your bank account. The reimbursements take years. There are people in Italy waiting for reimbursements from bail-ins that happened to them 3 and 4 years ago. They're still waiting to this day, right? It's once you go down that path, you know, you can pay lip service to all the protections you want. It doesn't work in practice because you're trying to prop up a banking system that are casinos riddled with derivatives obligations. The people who invented bail-in originally said, it's in the Dodd-Frank Act in the United States. They said there that derivatives claims have to have a preference because the consequences of defaulting on derivatives claims can trigger a chain reaction meltdown of the whole global financial system. And that's why they've got to have preference over deposits. And this is the bind that these bankers are in once they've gone down the bail-in path, right? And so when you see that ambiguity in New Zealand, contrast that to the absolutely emphatic assurances you get from every major party politician and government and the government in Australia to say, oh, no, deposit insurance means financial claim scheme means, you know, don't have to worry about bail-in. Rubbish. Absolute rubbish. And as I said, the kicker is they're talking about a system for their banks, which are our banks.
Yeah, absolutely.
Right?
Yeah. And it's worth highlighting a couple of other things around it, right? Of course, in New Zealand, the central bank there is putting more capital on the banks than here in Australia, so that they're actually being forced to more capitalise there than here, right?
And more capital and more again on the Australian banks in New Zealand.
Yeah, that's the point. Yeah, and they're not allowed to shuffle money between the two countries either. So they're trying to sort of ring fence their New Zealand banks because they're worried about the Australian end, right? That's the central bank in New Zealand saying, "Oh, we're not sure about the Australian banks," you know. So the fact of the matter is that there is already tighter controls and more coming in later. They've sort of postponed it slightly because of the COVID episode, but that's still their intention. They're still wanting to do that. And you know, here we come back to the same issue, right? All of this is just trying to protect the financial system, right? It's not protecting real people. It's not protecting real businesses. It's not actually helping the real economy, right? And we've lost the plot when the central regulators and even the politicians are more worried about financial stability than economic sustainability and economic, the future of the economy and of the country. And that's the problem I've got with all this. You know, that they are just going down a rabbit hole, right? Protect the banks, save the banks, they're too big to fail, blah, blah, blah. No. They should be unpicking this. They should be basically saying we've got to move to a financial system that is not so fragile, not so risk-borne, that effectively everything we do has to be seen through a lens of financial stability, right? That's the problem we've got. But no, nobody wants to tackle that, although, of course, that report from the UK may be a glimpse of, conversations to come.
Well, so what I wanted to talk about next relates to that because, I think our Kiwi friends who are listening to this, there's some, while there are some things to admire about the honesty and insight of the financial authorities in New Zealand, such as them recognising there's Australian banking risks they want to protect New Zealand from, you got to appreciate what they're doing with bail-in is a choice, and there's an alternative approach to this whole question of how do you protect the stability of a banking system. And New Zealand is one place that's perfectly around this issue because this is a new law that hasn't passed yet, the statutory bail-in law. New Zealand is a place that should have a debate about should we do this or should we have Glass-Steagall, right? Have introduced bank separation so that go back to the principle that kept the American banking system free of crises for 70 years, 1933, or close to 70 years, 1933 to 1999, the Glass-Steagall Act was enforced there. And it was the principle, and other jurisdictions around the world either copied it or they had their own version of it, or they had their own sort of tradition that you didn't do that sort of thing anyway. Deposit-taking banking and investment banking should not mix. And that's how you protect your banking system. And so New Zealanders should start that debate with their government. Why are you going down this path and following the rest of the world? Some of the most admirable things about New Zealand is when it actually defies the rest of the world, or the Five Eyes. You know, I admire when it defies the Five Eyes on certain issues. Does things independently. Lead the world on proper banking reform, right? And actually reject this bail-in path, because it's practically a problem, and it's morally a problem. Morally, it puts the burden on innocent people, not where it belongs. It protects the bankers and the gamblers in the banking system, right? And the burden goes on the innocent depositors, morally. Practically, as my friend, who is the former deputy director of the Ministry of Finance in Japan, which did have Glass-Steagall because of Japan's relationship with the United States, and this guy has jailed bankers when there's banking crises in Japan. He from the beginning of bail-in blasted it, saying this is insane because the basis of a banking system is the confidence of your depositors, and this will destroy it. And the only reason it isn't more systemically destroyed the confidence of depositors in the banking system so far is because the actual application of bail-in has thus far been limited to Cyprus and some localized cases in Italy and in Spain. But in Europe, in Italy and Spain, there was enough to force the European Union to have to come up with other laws to overlay on their bail-in law because of the risk to the systemic stability of the system from destroying the confidence of depositors. For instance, now in the European Union, they have a power that as soon as the authorities catch whiff, the slightest whiff that a bank might have some kind of a problem associated with it, they can preemptively freeze all deposits so there cannot be a run on the banks. Why? Because it was enough for the people in Europe to hear what some people in Italy and some people in Spain had gone through to know that, I don't want to go through that. And if I hear my bank's in trouble, I'm going to run and get my deposit out. So they had to do that. We're 14, we did it on our show this week, Martin, we're 14 years now after the first signs of the impending global financial crisis, when Bear Stearns hedge funds bit the dust, including a couple of Australian ones. And we know what we all went through, but 14 years later, there's a lot of commentary about how the systemic risk is again overwhelming, right? Even though we had the QE distortion and the for a long time there, the COVID pandemic was its own distortion and a sort of a distraction as well. The reality of undeniable systemic risk in the banking system is not starting to shine through again, right? So we're at that point again. And so now, though, unlike in 2008, we have this global bail-in regime in place. And if they ever use it, I reckon they are going to destroy the basis of the banking system, which is the confidence of depositors. And the Kiwis could actually have a fight. Now, you could do things like start a change.org petition calling on the government not to pass this bail-in law and go with Glass-Steagall instead. If you're interested in doing this, feel free to get in touch, get on our website, the Citizens Party website, citizensparty.org.au. Get in touch with our people. We already talked to plenty of people in New Zealand who get our material because they've been interested in these subjects. People in New Zealand could organise around each other and team up on this and actually start making this an important point to fight over. And that'll also be good for us here in Australia. It can influence the debate that's happening here. So I really urge that. And why that related to the UK is that in the UK, when we were really fighting hard on Glass-Steagall against bail-in, as it erupted, the bail-in system erupted in the wake of Cyprus. I took my first trip to the UK in 2014, And the reason I went there with some colleagues in our office is because we had looked around the world to see whether the Glass-Steagall debate was the strongest, and it was the strongest in the UK. There was an incredibly powerful debate in the UK Parliament about Glass-Steagall. A lot of those wiser heads, including ex-bankers from the city, who were old enough to remember before the Big Bang, which you know what I'm talking about, Martin, when Margaret Thatcher unleashed the deregulation in the City of London, that there were certain standards before that they destroyed. And in fact, the guy who did the Big Bang, Nigel Lawson, Lord Nigel Lawson, was the main person to do a great big mea culpa and become the biggest supporter of Glass-Steagall in the UK in the last decade, because he recognised that what they did then by allowing this massive merger of investment banks and high street banks, or what we would call commercial banks, had been a disaster, right? And put the basically gave investment bankers the power to extort government bailouts because they're holding deposits for ransom, right? And it's put all the systemic risk into the system. So Kiwis, we're fighting this fight here, and we still will, but we're fighting with a government that's playing charades and peekaboo, right? Saying, oh, there is no bail-in, there is no bail-in here. Your government's far more transparent. There's not a debate about whether there's bail-in there. Now you get to debate, should we have this bail-in system or should we have Glass-Steagall? And Martin, I did say I would say why I think New Zealand, the answer to the question is New Zealand, the bank deposits are probably safer, potentially safer in New Zealand than in Australia. And that's for this reason. Unlike Australians, if the government has a bail-in, if the government persists in New Zealand, persists with bail-in, at least the New Zealanders have an alternative to their big four banks. And that alternative is Kiwi Bank. And Kiwi Bank is a public postal bank, which is what our party is campaigning very hard for in Australia, right? And related to our campaign around Christine Holgate and supporting the licensed post offices. Australia would benefit immensely from having a public post office bank. And in the context of bail-in, you see its benefit, because you're only going to get bailed in a bank if that bank is in danger of failing. And that bank's only going to be in danger of failing is if the owners of the bank, the shareholders, lose all their capital, right? Well, Kiwi Bank is owned by the New Zealand government. So whatever bail-in law is passed, on paper it'll apply to Kiwi Bank as well, except Kiwi Bank's never going to be in danger of going bankrupt because it's owned by the New Zealand government. And the Kiwis who are watching this, you have an opportunity to vote with your feet and start doing your banking in Kiwi Bank. And I'm not paid by Kiwi Bank to promote this. I'm just talking about, I believe in the principle of public banks. And that alone can create pressure to make the New Zealanders the New Zealand authorities want to think twice about going down this path. Do they really want Kiwis to become aware of this danger and go, well, okay, clearly I'm worried about the safety of my deposits in these big four Australian-owned banks, but if I put into Kiwi Bank, they're not going to be bailed in, and vote with their feet, and you have a mass exodus of deposits into Kiwi Bank and away from the private banks. If you don't want that, don't go down the bail-in path. But that's what Kiwis have an alternative for now to do that Australians don't. And so that's my answer to that question.
Yeah, and it's just worth, as we come to the end of this show, highlighting that in New Zealand, because of the fact that they wanted people to understand that there are various risks attached to various banks, and as a depositor, it was your duty to try and figure out the most risky versus the least risky, which is tough to do at the best of times. So they basically publish statistics on all of their banks religiously. There's this whole scoreboard and a thing that you can look at, right? As if that somehow solves the problem, right? It doesn't solve the problem, but it highlights like a searchlight that is a thing that people need to be aware of, right? Not all banks are the same, right? There are high risks and there are lower risk banks. And the fact of the matter is that under the current OBS regime in New Zealand, right, if you're in a high risk bank, then the bail-in thing is perhaps more likely rather than less likely. So that's just another reason why people should be shopping around and thinking about where are the risks, where are the low risks. In Australia, we don't have anything like that. There's no information other than aggregated data that APRA sanitises to Bilio, so we can't really tell much about any risk. But in New Zealand, there is a set of scorecards for each of the financial institutions.
But it's a bit like the fine print of a 100-page contract that they can say, "See, it was all in there." It's up to you to have read it.
Yes, exactly right.
But there is that public option. So here we have to create an alternative.
Yep.
We will keep fighting the government on bail-in, and maybe the fight itself will always be enough to stop the government from ever being game to use it. But the fight, there's lots of reasons you and I have talked about the benefits of a postal bank. In the context of this conversation, that's a huge benefit as well. If we can have a public option that creates almost, it's in a sense, it creates its own kind of Glass-Steagall separation, where there's a no frills public bank that people who are concerned about these systemic risks in the financial system, if the government's not going to protect them, they can go like through proper regulation like Glass-Steagall, they could go there and know that, okay, that's a more protected part of the system.
Yeah, and those guys wouldn't be speculating in derivatives and taking huge positions on cryptocurrencies and all those other things and tying themselves up in knots with hedge funds, right? It would be meat and potatoes banking to provide banking services to small businesses and households in the country that need the financial support and help to do the things that they need to do for their everyday business, right? That is the sort of banking we need, not the highly speculative, highly leveraged, highly risky stuff that we've got at the moment, which, as we started highlighting right at the front, has been supported by central banks around the world, massive QE programs, massive liquidity programs, but nothing has been solved.
Indeed. So Kiwis, join the fight.
Yeah, your time has come. Robbie, thanks very much once again. Always good to talk with you.
Thanks,
I think it's worth highlighting always these fundamental important issues, and don't just fob it off as nothing relevant, right? These are really, really important issues, and there is a chance to have a say and make a difference.
Yep, exactly.
Thanks very much. See you later.
See you, Martin.
Bye.